Hi traders, hope you're doing well. Welcome to my video on the Volatility Stop Indicator. In this video, I'm going to show you a strategy that you can use to capture moves such as this one for over 500 pips and this one for also over 500 pips. So I have the Volatility Stop Indicator here on my chart. Okay, you can see that it's a channel-like indicator that follows the trend of an instrument and displays potential reversal zones. Does this by combining the average true range and a moving average, which monitor the trend flow and reversal zones in the market. Okay, so I use this in a to find trends, to find market trends, and to help time my entry into the trend. That being said, I actually do not think it's a necessary indicator simply because you can spot these entries regardless, but we'll get into that throughout the video. You can use this on any trading instrument, so Forex, stocks, cryptos, commodities, indices, etc. And any chart time frame. This is a 4-hour British pound US dollar chart in the MT4 trading platform. Okay, I prefer the higher chart time frame simply because they contain more price data and therefore I find signals tend to be more reliable. That applies to technical indicators such as this one, along with price action analysis, so support, resistance, trend lines, candlestick patterns, so on and so forth. Okay, so the first thing we do is we establish the direction the indicator is telling us to trade. In this instance, it's red. So when it's red, we look for sell trades. When it's blue, we look for buy trades. Simple as that. What I wouldn't do is I wouldn't buy and sell every time it changes color. You can see if you sold here, bought here, sold here, you could have been chopped in and out of the market. So instead I wait first for confirmation of a trend forming. So we could see up here we had this level of resistance. Okay, price began to move away. As it moved away, the indicator here changed red, so we could start looking for a sell trade. And then we had a nice level of support formed here on this pullback. Market was making lower highs. Okay, so we had resistance there. You got a triple top formation there. Price starts to move away. In fact, we had a level of support breached there. Okay, lower highs, as I said here. Market's falling. There's a nice pullback here. However, price meets resistance. As I said, 4-hour chart, so plenty of price data in there. Lower highs again. And a breakout here. We could have entered on this breakout into this downwards trend. Stop loss I would have placed probably above the high here somewhere, so around 20 odd pips, and a profit potential of around 400 pips on this downwards move here. Okay, not everybody of course would exit right at this point, but what we can do to try to maximize the trade as much as possible is, first thing I do is once I see a big move in my direction, I'm going to move my stop loss to break even just to lock in the trade and never let a winning trade turn into a losing one. So it just protects us if the market does turn around. And then as price continues to fall, I'll just move the stop loss above the recent highs just to lock in profit as much as possible. You can of course close part of the position on the way down as well, 25%, 50%, whatever you feel comfortable with, and just bank some pips. But the main thing we want to do is try to capture as much pips as possible on each move. I wouldn't use a fixed take profit myself, simply because, I don't know, let's just say you have a 50 pip fixed take profit and you exit the trade around here somewhere, you've just left way too much on the table. So I look to take what the market is giving me. For exiting, you can exit on an opposite signal as well. Okay, you can just keep an eye on price action. When you see higher lows and consolidation, you may consider manually exiting as well. Okay, so basically what we do is we use this indicator to show us the direction of the trend, and then we can just time our entry on breakouts. So you had a breakout there, then you had this pullback here. Okay, this pullback here, breakout there, support line becomes resistance, continuation. Okay, same thing here, breakout and M pattern formation, continuation. Okay, you can trade the breakouts. You can also trade the pullbacks as well. If you see price pullback like here, create this resistance level, then you've got this bearish price action. Okay, got a 3 inside down candlestick pattern there. You've got an inverted hammer, bearish inverted hammer, spinning top, bearish spinning top as well. So lots of signs of bearish price action there. And of course, just a breach as well of that trend line there. So an opportunity to enter there as well. Okay, I actually prefer price action trading. You don't necessarily need an indicator like this. You can just see that the market is making these lower highs and just time your entry short into the downtrend. Here as well, the indicator, that was a short example we were looking at. If we just look at an example trading long with this indicator, you can see here, when it's blue, the market's moving up. Okay, see this nice move up here as well. You can use your eyes to see that. Don't need an indicator to tell you that. Market's making lower highs. Wait for a pullback. There's a pullback there. Pullback and then a breakout in the direction of the trend. So we wouldn't sell here. And also what I wouldn't do is I wouldn't buy at a peak. So you don't, after a big move up, you don't want to buy at the top there. Basic stuff, but it's just important to be aware of. You know, once you see a big move up, you don't buy at the top. You want to wait for a pullback. As I say, some traders will trade on the actual pullback itself. Others will just wait for price to climb back up. Pullback, breakout, okay. Pullback, breakout, resistance comes support. In this way, you can capture a good timed entry into a trend. See this resistance there, pullback, resistance, breach of resistance, resistance, then comes support, and you can be in on this move up. Whereas this is perhaps late into the trend by the time we get up here. Nonetheless, there is an opportunity there, breakout, pullback, holds up a support and continuation. And there, albeit small, you don't really want to buy at the top of this. And then as you see the indicator change direction, you can exit your position. Ideally, you would have been in around here somewhere. And again, stop loss below the lows. So initial stop loss probably below this low here somewhere, around 15 to 20 pips, which is relatively tight. And then just use a trailing stop below the low, below the low, below the low, below the low, below the low. Just maximize the move as much as possible. Don't want to exit prematurely. If we do, you can always look to re-enter. Okay, but again, you don't necessarily need this indicator. You can just see that the market is trading in an upwards direction. Just use price action, analysis, support, resistance, trend lines, candlestick patterns as well. So you've got an engulfing bar there, for example, completely engulfs that previous bar. Same here. This is actually a master candle. So it's got 1, 2, 3, 4, at least 5 candles within it. This bullish one here, that's a strong bullish signal. Okay, so another inside bar there. Okay, lots of bullish signals, and you know, you can see you just basically, if anything you take from this video, we're not trading against the trend. We wouldn't sell, so we would have avoided bad sell trades by trading in the direction of the trend. Okay. As I said, you can use this on any trading instrument and any chart time frame. Just make sure you've got good discipline, so don't let negative emotions, fear, anger, and greed cloud your trading decisions. Don't get FOMO, fear of missing out. Don't do revenge trading. Okay, here another example. We're still in this bearish move. Okay, resistance here. Price continues to drop. You can actually trade this breakout here. See the strong level of support. Let's just breach. Price falls there. The indicator is red. This is a good entry. You've got an M pattern there as well. Okay. Market's making lower highs. Okay. In fact, there was an earlier breakout there. That may have been obvious on, say, the 1 hour or shorter term chart time frames, but nonetheless, strong level of support. Big breakout candle there. They come into this line of support. Once that's breaked out, it's a free fall from there. And again, a little pullback. If you're late to the party, you just wanted confirmation, you can wait for a pullback and enter on the breakout there. Again, don't sell too low, and obviously don't sell against the indicator changing color as well. Okay, hopefully you found something useful in this video. Thank you for watching. Please like and subscribe. I hope to catch you on the next one. Take care.